Welcome. I am Eric with Muathe.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So as we come close to the end of 2021, US markets with about an hour and a half before the end of this trading week, trading day, and trading year, this is how markets and where markets are trading, and we can take a quick snapshot at where Bitcoin and Ethereum are trading as we come close to the end of the year. Ethereum at 3652 and BTC trading at almost 40. Let's call it 46,000. Now we can see here as we come close to the end of the year, some markets are closed. US markets a little bit to go, an hour and a half, but we can see for the year, the Dow is up 18 to 19%. Nasdaq had a nice year, up 22%, and the S&P 500 was up 27% for 2021. We can see in comparison, for example, the Nikkei was up about 5%, the DAX up 15%, FTSE up 14%, and the French market up about 29%. Wow. Now, visually, this is a 1 year daily for the S&P 500. We began 2021 right there. So we can see visually a nice year for the S&P 500. Closing pretty much close to all-time highs there. Take a look at the Dow, and the Dow opened the year right here at about 30,000-ish. And we've had a decent year, if not a great year. Nice move. Take a look at the Nasdaq, which began the year at about 12,600. And again, pretty much nice move. Now the Nasdaq is a little bit off its all-time highs compared to the Nasdaq, compared to the Dow and the S&P 500. If we take a look at the Canadian market, also nice year. This is beginning of 2021. We've had a nice year net. And if we take a look at the Nifty, we can see that the Indian market also had a good run, beginning the year here at about 14,000 and pretty much ending at about 17,200. Nice gain for the year. If we take a look at Bitcoin, it began 2021. Let's call it at about 30,000. And at some point this year, tagged 69,000-ish. Now closing the year at about 46,000. So it's been a roller coaster ride. Net, we can say after all this, still a positive year gain for that cryptocurrency. You take a look at Ethereum. Ethereum now, net. If you take where it began the year under 800 at about 750, beginning of 2020, and we went all the way as high as close to 48K, 48,000. So a big run. Currently trading at about 36.51. Now, take a look at gold in comparison. Gold began the year 2021 right there. This is GLD. And we can see we've generally had a down year as far as gold is concerned compared to where we began the year. So a down year for gold. If we take a look at, let's take a look here at crude oil. We see that crude oil began the year, let's call it about 48, and ending the year around the 76, 75 price dollar area. So a nice gain for crude oil there. And so that is just a summary of the visual look from a 1 year perspective. Now, let's take a look at the Dow here. I begin with the Dow Daily because the Dow is the one that is staging the most recent breakout as far as major US markets are concerned. So on the daily for the Dow, we would need to watch this as we begin 2022 because we need to stay above this to encourage markets to go higher. So for the Dow, the level that we need to watch from a breakout perspective is 36,432.22. Now the Dow would need to stay above this price level if there's gonna be a major move in 2022. Otherwise, If we end up staying below this price and cannot stay above it, then that failed breakout is actually gonna set the stage for movement lower net for 2022. So it's a simple way of tracking the market. Again, above this price level, bulls can be encouraged that markets are still showing strong momentum. And if they cannot hold this price level, which is the daily breakout, then the bulls are gonna have to experience a down market. Whether it's gonna be down for the whole year or not, who knows, but we shall see. Now, one thing that I pointed out to paid clients during the week is, as the Dow's recorded this fresh all-time highs, the RSI did not, on the daily, take out the 61.8 threshold. And also, if we take a look at this most recent pullback, coming off the highs of November, we see that this is where we pull back from here for this pullback area. And essentially what we are doing is coming back, and the RSI is testing this price level or this RSI level. So if the price is to stay above the breakout level of 36,432, we would need to clear this RSI area. And again, visually, if we are unable to sustain above this price and we drift lower, and if the RSI continues confirming resistance here, this is going to be a confirmed negative divergence of the strongest bearish kind, in my opinion, as per my research, which means that it would be setting the stage for a move down. So we can also watch this RSI level, because we need to clear this if the market is to go higher on a day-to-day basis. If we take a look at the weekly for the Dow, so 2 years of weekly data, we can see that there's also a breakout attempt that is still ongoing. And actually, the Dow has an opportunity, depending on where it closes, the exact close for this year. It could go on to close at a fresh all-time weekly closing high if it can close above 36,327.95, which is the prior or the current confirmed all-time weekly closing high going back to November of 2021. So any close above this would be also a breakout, which is exactly what the bulls want to see. So this is also another number to watch. Above this number, again, bulls can all be all smiles as they anticipate a continuation of this breakout move. And should we not hold this level week to week and we go below this price level, that will set the stage for a more meaningful pullback. So it's a good number to watch. Above it, bulls are in control. Below it, bears are starting to take control in the short term and could set the stage for a serious pullback. Now, of course, the question is, are we going to have another successful year in 2022? Well, who knows? But we shall see. We can only take it moment by moment. Now, down the road, there might be a need to watch this recent weekly closing low from late November, because if the Dow ends up breaking that level, that in itself would be a level to watch for a potential move down. And that level is 34,580.08. So that's the weekly closing low from late November. Should we at some point break below that price level, that would definitely be a signal to be defensive. If at some point in 2022 we break this price level, be on the lookout, because that would suggest that the breakout that is taking place here would have failed, and now we would have a second red flag, which would be a warning in itself if we ever break this price level next year or in 2022. Now, from an educational standpoint, we can see what happens when the market holds RSI 50. We tend to have good reaction and good reversals, and the Dow once it reversed here, the indication, the suggestion was that it could very likely be going back to new highs, and that's exactly what has happened there. It's another way of saying that also we need to watch the RSI lows trend line as we go forward, because should we at some point break this trend line connecting RSI lows from early 2020 and late 2021, a break of this trend line would also be a signal that markets are potentially looking to go down. All right, one more chart, which is the Dow Monthly. Let's take a look at the Dow Monthly. Dow Monthly definitely gonna close at a fresh all-time monthly closing high, fresh all-time monthly closing high as we go and finish this year. So we can see that the Dow is still above the monthly breakout of 35,819.56. So we can say that this is still a successful month-to-month breakout for the Dow, and needs to stay above it and can actually go higher as long as that breakout is intact. Now again, of course, as the breakout is intact, but if it breaks it in the new year, be on the lookout, be on the watch for a major reversal in the market. Also, whether we are going to continue seeing a strong early 2022 is going to be dependent on whether or not the Dow can reclaim RSI and stay above RSI 69.1. If the Dow reverses and turns negative around here month to month, that in itself would be a signal that more than likely this breakout is going to fail. We're going to move below this price. RSI is going to give us negative divergence. And if you combine all of that information, if it happens the way I'm describing it, then chances are, as the market has made new monthly closing highs, RSI being lower would definitely be negative divergence and will set the stage for a bigger reversal next year. But for now, the breakout is intact and the Dow is still doing its best and could eventually move above 69.1. If the Dow can move above 69.1, that's the best bullish case scenario as far as the Dow is concerned. The S&P 500 this week was at fresh all-time intraday and daily closing highs, and that is also, we can say, definitely a breakout above the prior daily closing high, which actually I'm going to use this, and that was at 4,701.70. So as long as the S&P 500 is showing a breakout above November's daily closing high, early November's daily closing high, this is still a good market and could see higher prices. In the short term though, we can see that the market did move to fresh daily all-time highs for the S&P 500, but this has come with negative divergence to date. We've made a lower low on the RSI. Also, this RSI did not take out the 61.8 level. So this is the strongest type of setup for a move down, which is the strongest type of negative divergence, in my opinion, and by my research. And it also happens to match very well with where we saw a pull off the market, which is this area here, where we pull back. So late November, we get this shallow pullback zone here. And now it is turning into resistance for now on the S&P 500. And actually, we've tagged this twice this week and still unable to move above it. So if there's going to be a pullback, it's going to be because of this daily look. And if the market is to go higher beyond current price levels, then this is going to be taken out to the upside and prices are going to record fresh all-time and improved all-time highs. Right now, it looks like the market is showing a little bit, if we can say a little bit of resistance around here, which is where the S&P 500 stalled on its RSI journey. And for now, the indication net without more information is that this market looking to be sideways to down as we begin the new year, unless we can take out this current short-term resistance on the S&P 500 daily RSI. By the way, on the hourly for the S&P 500, and probably shouldn't be looking at this small time frame because we are looking at end of year performance and chart visuals. But we can see here that the S&P 500 essentially, if we take this breakout here, this breakout, again, this is the hourly. So we broke out here, which is somewhere around there on our way to fresh all-time highs. And so if we take that line and extend it, we can see as of Friday's action, the market is aware of this line and is doing its best to hold. If it can hold, then even hour to hour, this market still goes higher. And by, if we end up breaking below this, then that's going to set the stage for a little bit of a pullback hour to hour. Nothing big, because the main takeaway here is the big picture, the weekly, the monthlies, and maybe to some extent the dailies. And now we take a look at the Nasdaq. The Nasdaq has yet to break out, but there's nothing stopping it from breaking out. So we need to be aware of where that breakout level is. And it is the weekly closing high from the month of November. And that price level for the Nasdaq is at 16,057.44. So in 2022, the Nasdaq would need to break out above this level if it's going to see a big move in 2022. And again, as I've been talking about for a couple of weeks now, I've been coming and explaining that, in my opinion, the market was stabilizing based on this RSI movement here, which kicked off. Once we cleared this area, we had a nice run in the market. We haven't been back to those levels. And so we take that area just above 50. And I've been talking about this for a couple of weeks. Market's been coming back to test this area for almost 2 years now. In other words, what I'm saying is, as we go into 2022, we're going to have to watch this blue line, which is just above RSI 50, because it needs to stay above this blue line for the market to continue enjoying this run. And at the same time, should we crack and break this level, be on the lookout for a market that is going to be entertaining lower prices. By the way, also on the Nasdaq, we need to watch this 15,000 area, which is just around where we had that weekly closing lows. Not precisely at that level, but around 15,000 for the Dow, for the Nasdaq, 15,000 for the Nasdaq. Because if we break that level, that would be a violation of the current base. So a break of this area here would signal a market due for a move down. So you'd need to watch that 15,000-ish area as a line on the sand, because a break below that level would set the stage for a market breaking its most recent base or sideways base formation, which is this base here. We can say this is a base. We need to break out to move higher. If we break below the base, that's a sign of a market due for maybe a bear market, maybe a shallow pullback, but at least would be sending prices lower if we break below this range. And of course, we would need to break out if the Dow is to, if the Nasdaq is to experience a big run in 2022. And as we've seen with other charts here, we can see that just like the Dow and S&P 500, there is a line here on the Nasdaq daily, where we've had pullback areas. So there, I believe there, and also here. So this is the line that the Nasdaq would have to move above on the daily RSI if it's going to continue higher and stage a fresh breakout. It needs to clear this blue line. Now, the following line might be a stretch for some of you who are not familiar with my work, but if you take these two areas here on the daily for the Nasdaq and connect the two and extend them out, something like that, you see again that market has come back and is showing resistance also on the back test of that red line. So if we're going to move higher in the short term, we would have to clear this line, or both lines, the red and the blue, to the upside. Otherwise, right now the market is indicating a pullback situation, and expect a relatively expanded down day whenever the Nasdaq drops below RSI 50 on the daily. By the way, if you take a look at the Nasdaq 4-hourly and on the price, connect the lows here and here, you get a following trend line that looks something like this. So we're extending that trend line. Should be somewhere around there. So we get this break point, which of course is where we get a pullback also. Right there, before this move down. Essentially what we've done is we've come back to test that break level. So visually we would need to take out this area here. So you can see we've tagged it twice. Actually a couple times, and it's turned into resistance. So on a short-term basis, we would need to take out this line if the Nasdaq is to eventually move above the current level and potentially break out. It would need to take out this area here where it's been struggling on the small time frames. You can use the hourly or the 2-hourly or the 4-hourly to see that resistance. So right now, net, it is suggestive that the market is still pointing down, as we've been discussing based on the daily also. Now, this is the 5-year monthly chart for the Nasdaq. But before I take a look at the Nasdaq, let's take a look at the S&P 500 monthly chart. We can see the S&P 500 spent most of 2021 with its RSI above 69.1, which might explain why, since about March, once we broke out here, why the market actually had a good year. It's because the RSI, for the most part, stayed above 69.1 for the S&P 500. If the S&P 500 is to continue having this major run, the RSI would have to stay above 69.1. And at some point in 2022, if we break below this 69.1 threshold, back below it, that's going to be good for a big monthly move lower, maybe even setting the stage for beginning of a bear market. We shall see. Now, as far as the Nasdaq is concerned, the Nasdaq's been above RSI 69.1 since about October, November of 2020. So it's been above 69.1 for more than a year. So yeah, might want to check those textbooks that try and tell us to sell when a market moves above RSI 70. So no, actually moving above 70 is a buy signal. I've talked about this for almost 20 years, so it shouldn't be anything new to anybody. But anyway, breakout there late 2020, and more importantly, the RSI moving above 69.1 set the stage for this nice year. So if we're going to continue having a good year, definitely the Nasdaq would need to continue holding above 69.1. How long can it be above this level? It can be above this level for as long as it wants. Years, if it chooses to. The last time the Nasdaq had a stay above 69.1 was from early 2017. So 2017. And it stayed above 69.1 all the way till, let's call it, late 2018. So almost 18 months plus above 69.1. And you can see that that phase also was full of a move to new highs. A good market while the RSI was above 69.1. Eventually you drop below 69.1, and that's when you get this 2018, end of 2018 year pullback to begin with. But notice where the pullback stopped. It stopped exactly at RSI 50. Exactly at RSI 50. So you can get pullbacks, but if RSI 50 is used by the market for support, be aware that that means the market is going to reverse and more than likely go to fresh all-time highs. Holding RSI 50 with uniform action there, we reversed, went to new highs. We held RSI 50 with uniform action, we reversed, went to new highs. So at some point, if we get a pullback, really whether we go into a bear market depends on whether we bounce around RSI 50 or whether this time round, instead of finding support, we actually break and stay below RSI 50. That's going to determine whether we are going to see a major pullback or a healthy pullback or a major bear market is what happens down the road around RSI 50. By the way, if you are wondering, if you go back to the lows of 09, since 09, the Nasdaq has been using RSI 50 as support. So this is not something I'm just saying off the bat. This is a researched phenomenon. And so all of this, even the lows of 2016, lows of late 2018 as we saw, lows of early 2020, and we all remember this period. Guess where it all stopped? It stopped with RSI holding on the monthly at that 50 RSI level. So if something is going to change, then since 2010, we would need to break below RSI 50 for there to be an entertained aggressive bear market to the downside, which would be something different than what the market has done since all the way back to 09. It's been above RSI 50 and has used that RSI 50 for support. Hope all that makes sense. Now, looking at the Canadian market, and I just need to tell you, markets are complex. That's why we study them. But you can see the Canadian market, just want to highlight that sometimes the support doesn't come at RSI 50. You can see here off the lows of 2016. This is now being used for support in late 2018 for the Canadian market. We went below this line, back above it with uniform action for the lows of early 2020. So support can come in different types of flavors and formations. You just need to be aware of them. For now, we can see the Canadian market is definitely going to close at a fresh all-time monthly closing high. The RSI on the monthly for the Canadian market is above 69.1. So if it needs to have a good year in 2022, it needs to defend this 69.1 threshold to continue building higher. Otherwise, if the monthly breakout fails, and let me give you that monthly breakout level, it's 21,037.07. As long as it is breaking out above this price, we can put a smile for those who are bullish. And should two things happen, a failed breakout, in other words, if we drift below this price, if the RSI is back below 69.1, friends, that's going to set the stage for a pullback of some serious nature. Not serious, but, you know, magnitude-wise, big pullback. If the monthly breakout fails and RSI 61.8 turns into rejection. But staying above 69.1 on the monthly and the RSI price is holding this price. In other words, a good breakout, a successful breakout, if it continues, sets the stage for even higher prices. So we can say, based on this chart, without having any more information, this is a strong market because it is breaking out and the RSI is back above 69.1 on the monthly. On the weekly, well, where to begin? All right, so we can just go quickly here. RSI 50 support has been used by the Canadian market. Uniform activity there in October, November of 2020. And we've done the same thing here, November, December. So as long as it is above RSI 50 on the weekly, this is still a stable to bullish market. Now, unlike the S&P 500 and the Dow, the Canadian market has yet to break out to all-time highs. It looks similar to the Nasdaq in a sense. And also, if you take a look at the recent RSI lows line, this line here, or this lows and this lows, if you connect it to, you can see visually that this area is turning into a question mark right here, because it could turn into resistance if the market is unable to move above this line, and it could turn into a momentum buy signal if the market can clear this blue line. So week to week, we shall see which way it goes. By the way, on the daily, it is confirming what we are seeing with the other markets, S&P 500, Dow, and Nasdaq. This area here is where we pull back off the highs, and without any type of adjustment, we see that this is being used by the market as resistance. So until we clear this line, it is suggestive that as we begin the year, we are leaning towards a market that is on a day-to-day pullback mode. Again, all dependent on whether or not we are above the blue line, because if we can clear the blue line to the upside, then this market still has an opportunity of breaking out to fresh all-time highs sometime in 2022. Now, take a look at the Nifty, and brings me back to the lows here from an educational standpoint. Well, to understand where that support comes from, you have to understand that we moved out of this range in 09. So this range here in 09, major lows. Take that information, draw what I call, by my concept, uniformity, and there you have it. Anytime you bounce on this line with uniform activity, hence why I call it uniformity, it tends to be major lows area. Uniform activity here in 2016, early 2016, early 2020, uniform activity, we went above the line. We went below the line, back above it with uniform action for the monthly lows of early 2020. So again, support can come in many flavors. Right now on the monthly, this is going back to 09. If we zoom in a little bit closer, we can see that the Nifty still is holding its monthly RSI. Since about February, March of 2020, the RSI has been nicely above 69.1, and can explain from a technical standpoint why we had this big run for 2021. Now, we would need to see a fresh breakout if the Nifty is to record an improved all-time high down the road. In other words, a breakout is needed if the Nifty is to continue higher. Otherwise, if it does not break out, then technically, without a breakout, there is no strong upside. So 17,671.65 is the monthly closing high, I believe, from the month of October. It would need to clear that price level if we're going to get fresh momentum. Now, keep in mind, a breakout is needed, hence why some of us only play breakouts, because you can see here the breakout set the stage right here for momentum to the upside. This momentum comes after the breakout. Without a breakout, you are in a sideways to down market. So that's why playing breakout makes sense, because if you can time this entry, then you have the opportunity of riding a market to the upside. Now, on the weekly, we can also see that it's going by the script, if I can call it that, but we can see there was a breakout here in June of 2020. We haven't been back to those price level. Take that area and draw your uniformity line. And the market somehow is aware of these technical aspects. We bounce. We can say we came close here, but not quite, but bounce. And this is where we've been holding during the most recent weekly pullback. So clearly, we need to stay above the blue line if the Nifty is to continue building for the next potential breakout. And if we end up breaking this RSI 50 level, be on the lookout for a deeper pullback. And that's the weekly setup. On the daily, if I connect most of the lows going back to 2020 on the RSI, if I connect most of these lows and extend it, we can see that the market is aware of a potential backtest line there. So clearly, day to day, we need to clear this line to continue building higher. Resistance on this line would mean that the next day-to-day swing trade direction is to the downside. But keep in mind, this market is net sideways because we have a declining 50-day moving average and an upward trending or sloping 200-day moving average. So we are between these two moving averages. Net, this is still a sideways market. Now, this resistance here can also be seen to be similar to where we broke down. And so let me show you that area. So this breakdown here, right here, on the RSI, coming off that area, and it seems like we could still be testing that line. So putting it simply, we need to stay above the blue line and the magenta line if we are going to move higher. Otherwise, this could be a short-term area of potential day-to-day resistance. But remember, the monthly is still strong and above 69.1. So net, don't be surprised if it takes out those two lines. And the two lines, again, just to be clear, line number 1 is right here, and line number 2 is the backtest line, connecting all these RSI lows, extending it out right there. So we need to clear these two lines if the Nifty is to move higher. Resistance around here day to day means that the next meaningful direction from a day-to-day perspective is lower. Which brings me to the GLD, or gold. This is the ETF that tracks gold. So net, as we established, gold was down. Remember, it began the year somewhere there. Now, the one thing that I've kind of been noticing and talking about is now that we're into 2022, there is a likelihood that gold actually moves to fresh 3-year lows, because we're closer to 3-year lows as opposed to being back above 69.1. So because we could be setting the stage here for a move to 3-year lows if and when gold moves to 3-year lows, be on the lookout for a major drop in gold. In other words, if you're bullish in the gold sector of the market, it would need to continue holding its RSI above 50 so it can build and build over time for potential future breakout. A breakout is needed if gold is to turn into a strong upside instrument. Right now it is sideways. Again, as I've been saying, with the possibility of moving its RSIs and MACDs to 3-year lows. As you can see, we are closer to lows and we are at closer to highs. So this is the line here. You can draw it as such. See, we're very close to this line. So drifting below this line would move it to 3-year lows. And that would set the stage for a bearish move. Again, the RSI very close to 3-year lows. If it breaks to 3-year lows, be on the lookout for a big down move in gold. Why? Because it would at that point meet the minimum requirements for what I call the ultimate Muathe sell signal, which is the inverse of the ultimate Muathe breakout, which looks for bullish setups. Now, if we take a look at crude oil, if it's gonna go higher in 2022, it would need to break out. This is WTIC. We need to break out above the recent monthly closing high from the month of October. That price that WTIC would need to break out above is at 83.57. Simple breakout is needed if it's gonna move higher. And we also need to watch the monthly closing low from November, because if we break this price level, actually now the stage is gonna be set for movement lower as far as crude oil is concerned. So let me give you that number to watch on a monthly basis. From a bearish perspective, if it breaks it, 68.18, which is the monthly closing level for the month of November 2021. Which brings me to XLE, and I wasn't sure that I should add this, but I'm gonna add it anyway. And we can also see here it needs to break out above the recent monthly closing high from the month of October, and that price level for XLE to break out, if it's gonna go higher, is 56.78. And we can see that it needs to hold above this monthly closing low from November, because a break of that monthly closing low sets a stage for a pullback of some size, and that monthly closing low is at 53.89. So if we were to break that price level, I would say that sets the stage for a meaningful month-to-month pullback. Now keep in mind, as far as XLE is concerned, if it can break out in price, you can see that will be setting the stage for a bullish move, because it would give it the opportunity to move its RSI to 3-year highs if it can break out in price, and would give it the MACD the opportunity. In fact, one of the MACDs is already at 3-year highs. So we only need the RSI to move above 69.1 so it can meet the minimum requirements for the ultimate Muathe breakout, which needs the RSI and the MACDs to move to 3-year highs. Again, if you want more information, there should be some links in the description. Unless I forget to include them in the description, they should be there, or look for the ultimate Muathe breakout on my channel. Lots of videos under that playlist. Alright, let's take a look at Ethereum as we get close to wrapping up this lengthy analysis. Ethereum right now trading at 36.47, and we'll take a look at Bitcoin, which currently is trading at 45,915. So as I've been recording, they've been going down, but we shall see. So right now, as I told you, Ethereum is dropping below RSI 69.1 on the monthly as we come to the end of this year. Today is the last trading day. So as it drops below RSI 69.1, it's had a 21% down month. Again, whenever you drop below RSI 69.1, this is the reaction. Now that's the bearish takeaway. Remember, the last time we dropped below 69.1 was beginning of 2018, before going into an 80% correction in Bitcoin. Okay, so this is something we know. We knew this in 2018. I talked about it all those years back, that when it dropped below 69.1, be on the lookout for a bear market. So this is the bearish takeaway, that Ethereum is now beginning to show signs of a bigger potential to go down, as long as the RSI is below 69.1. As long as the RSI is 69.1, expect Ethereum to be looking lower net. Remember, it never recovered back above 69.1 here. in early 2018. This is the bearish look. Now, if you want to take a look at the potential for a bullish move is if Ethereum can stay below 69.1 this month and in 2022 recapture RSI 69.1. That would set the stage for a potential future breakout at about 46K. So a future breakout above 46K, depending on what exchange you are using, which is the area around which we have the all-time monthly closing high. A breakout here would be setting the stage for a powerful move higher. The RSI would be back above 69.1. The MACDs are already at, let's call it all-time highs. So MACD is no problem. So this is the other way of looking at it. The potential that actually this pullback was needed to reset. This is now the bullish view, that this pullback was desired because it sets the stage for another base to be formed and a potential future breakout. Now, if this future breakout is to take place, it's very simple. Ethereum must recapture RSI 69.1 on the monthly. If it cannot recapture RSI 69.1 on the monthly, be on the lookout for this down move to continue. Now, on the weekly for Ethereum, we can see that it is coming close to RSI 50. On the week, it drops below RSI 50. Whenever it drops below RSI 50, be on the lookout for a big down week. Now, yes, it is down for the week, but it has yet to break the RSI lows line. This line has yet to break, connecting recent RSI lows. And so we need to be cognizant that this could actually turn into a support line. And if it does, then actually we begin the year with a bounce. And if we cannot hold this line, then we begin the year with a massive plunge. If this line is, so a break of this line on the weekly, this is 2 years weekly. If it breaks, be on the lookout for a big move down as far as Ethereum and the cryptos are concerned. By the way, on the daily, just like the Nifty, we are also in a market that looks to be sideways. You got a declining 50-day moving average. You got upward sloping 200-day moving average. We are trading smack almost in the middle of that. That's a sideways market. By the way, on the daily for Ethereum, we got the RSI lows line here that recently found support. So again, the daily is suggesting that we have yet to break. So this could very easily turn into support zone. And if it does, then day to day, we might start coiling back higher. At the same time, a break below this line sets the stage for a continued push down. Right now, it looks like net, the line is holding. So net, we can say day to day, Ethereum is just pulling back and playing games. It has not broken any major daily trend line. Which brings us to Bitcoin. Now, Bitcoin, for those of us who play breakouts, we have no interest at all until Bitcoin can clear the 61,000-ish price level. Now, let me give you the price level based on Coinbase numbers. The monthly closing high from the month of October for Bitcoin was at 61,343.68. This is according to Coinbase. So Bitcoin would have to break out above this price. Otherwise, we have no interest. None at all. It would have to break out. Now, visually, it will be similar to the breakout that took place in late 2020 last year. See, in this phase, you have no interest. Don't even care. No interest. Don't care. From a breakout perspective, the entry was the breakout above 14,000, which was the prior all-time monthly closing high. Now, isn't that a better entry? Because you get the opportunity of riding this. knowing that actually it could have failed and gone back to the base. You don't know. At that particular point in late 2020, during the breakout, you don't know that the breakout is going to be successful. You don't know that. But what you know is a breakout can set things moving higher. So, using the same concept, Bitcoin would have to break out again above the current all-time monthly closing high. Now, if you want to cheat, you can actually lower your entry point from a breakout perspective, which is this monthly closing high, because we can, in theory, assume that this breakout attempt failed on a monthly basis, and that is at about 58,000. So 58,000 is this close right there. I believe that was May of 2021. So we can say that this was a failed breakout attempt. And so next time it could be successful. So you can still use 58K if you want to cheat and get an earlier entry point instead of waiting for 61,000 and change. Now, on this monthly chart, we can also see that if we take this breakout, this RSI breakout was beautiful. Now, that's another way of playing breakouts. Use the RSI. That's what I call swedge breakout. Links? No, I'll forget to add that one. Look for swedge breakout. If you're interested in this entry right here, based on the RSI, swedge. It should be under my playlists for free. Lots of videos. And I call it swedge because it's sentiment wedge. Anyway, take this RSI breakout and draw your uniformity line. And so you can see what I'm saying here is if we can hold this line as we did here, you could have a bounce if this holds. Could have a bounce, which sets the stage for a potential future breakout. And if this line can't hold, things fall apart and we go lower. Which brings us to the weekly chart for BTC, similar to that of Ethereum. There's a simple RSI lows line, friends. Simple RSI lows line right here needs to hold. If it holds, then guess what? We start finding support and coiling higher. If it breaks, well, it breaks. It means prices are going to have to probe lower price levels. By the way, on the daily, Bitcoin's been struggling a little bit for the month of December to hold above RSI 50. And you can see it's been struggling. Over here, it was rejected at RSI 50 with a uniform double top. So net, we can also see that we have a declining 50-day moving average. Very steep decline, by the way. And now we are threatening to break the 200-day moving average. So net, we can say it's trading with a heavy slant, the probability for lower prices. But it's not broken yet. Again, I want to conclude this with the weekly, because the weekly is going to take weeks to play out, and it's going to give us patience. This line is a line to watch for support or for break as far as BTC and by extension as far as the cryptos are concerned. And if you didn't see this breakout, or if you missed this breakout, this is when Bitcoin was enjoying bullish momentum. Hence why we play breakouts. Hence why I specialize in timing breakouts. We have about 10 minutes to go before the end of the week, end of the day, end of the year. So I might just pause this video while I'm recording so I can capture the closing bell. Wouldn't that be nice? So I might be back in 10, but to you, it might be a few seconds. All right, with about 2 minutes to go, I would like to wish each one of you, me, aka other selves, a great, prosperous, healthy, and joyous 2022 and beyond as we go deeper and deeper into the fourth density of love and compassion our ascension is assured. So it's been a great year net. Markets been positive, but let's not forget there have been stocks that have seen some big moves down. But net, the entire market is up. So we have to take the entire whole as a group, as a collective, and market's been up. So as we wait for the closing bell here, give it a few more seconds. And there it is, end of 2021. And so it is. I am Eric with Muathe.com, and I leave you, beloveds, as I found you, in the love and in the light of the one infinite creator. Go forth, therefore rejoicing in the power and in the peace of the one creator. We made it. Adonai.